What if I told you the biggest threat to your favorite stocks isn't even a recession? It isn't interest rates, but something that doesn't sleep, doesn't take salaries, and is getting smarter every single day. Because right now, behind the scenes, something massive is happening in the market. Over the last few months, some of the most loved software stocks, the ones everyone's thought was untouchable, have quietly lost 20, 25, even 30% of their value. Billions of dollars wiped out, and the reason is because of AI. Not just chatbots, not just hype, but a new wave of AI agents that actually do the work. The same work these billion-dollar software companies charge for. So here's the real question nobody is answering. Is AI about to destroy the software industry, or is this about to be the biggest buying opportunity investors have seen in years? Because here's the problem. Right now, the market is panicking. It's lumping all software companies into the same bucket, selling first, asking questions later. But what if that's completely wrong? What if some of these companies are actually at risk of being replaced, while others are about to become even more valuable than ever because of AI? That's exactly what we're breaking down in this video. And to do it properly, we're gonna deep dive on the 5 stocks that I think will create millionaires by the time 2030 comes around. And I'm not joking by that. We're buying a significant dip right now, and there is a reason that I'm going to go through all these valuations so you can see that fundamentally these companies have a good chance of making millionaires. So with that being said, if you haven't already, click the subscribe button and the like button. It would really, really mean the world to me if you could just do that and make my day, and let's go ahead and jump into it. So with that being said, how are these stocks going to create millionaires by 2029? So let's jump into it. The big question is this: what is the market afraid of? AI is no longer just chat. It's no longer just chat. It's now doing the real work, automating tasks software used to do. Are entire business models about to break, or will they survive? So what changed everything? AI agents like Claude Cowork can access files, run workflows, send emails, execute tasks all on their own now. Not just answering like simple questions like, hey, like ChatGPT, tell me like a quick sentence to say in an interview. No, this is replacing entire workflows. So the real threat is AI can now replace repetitive white-collar tasks, do work across multiple tools, and reduce the need for software subscriptions, which is a massive threat to those AI companies. So here was the market reaction. They usually sell first and ask questions second. We're dealing with billion-dollar companies, billions and millions of dollars. So when risk and major risk keeps popping up, first was DeepSeek last year, all the way up until Claude today, they usually sell first, and then they try to make the distinction between winners and losers and then get back in. So everything just gets a haircut across the board. Even if the company's great, even if that company's not going to be hit by Claude, it's going to get a haircut. So that typically equals, so not all software companies are equal. There are 2 business models, the per-seat pricing and the usage-based pricing. So the broken model is per-seat software. So this is the major component within the industry at risk. So an example of this is 10 employees use a software, and that needs essentially 10 licenses. But now what's happening is one person plus 10 AI agents can do the same job. And so these companies that were charging for 10 licenses actually now only make money from 1 license. Like that's what everyone's trying to figure out, because you can do the same output at a 10th of the revenue. So that's the main indication that, a lot of scary stuff happening in the software space. The safer model is this: usage-based software wins. So they're charging by data processed, by request, by usage volume. So when you get rid of 9 seats of the pricing model, you might still be using 10 seats worth of usage. And that's why this pricing model wins. AI uses more usage, and more usage means more revenue for those companies. So this is an important indication. And we're going to look at the companies who are making the smart pivot over to this sector. And a lot of people don't realize this. So make sure to subscribe if you like the content. The real world analogy to this is consulting industry disruption. So old model is billable hours. The new reality is AI replaces those tasks, but firms pivot to AI implementation and integration services. So you have to adapt to these times so you don't go extinct, obviously. And we're seeing companies, instead of doing the per seat model, start flowing into the per data model. So where AI actually helps within this process in the companies and industries that benefit. So cybersecurity, huge. AI-powered attacks are increasing, unfortunately. And the reasons why are pretty sad, because before there needs to be a very intelligent hacker. And over time, that's become less and less of a fact as more code that attacks businesses and companies becomes readily available. Now, unfortunately, you can use AI to find that code. And so AI isn't just used for good. There is some bad circumstances as well. So there's more vulnerabilities to the cybersecurity network and more demand for that protection with AI equals bigger attack surface. So since the launch of OpenAI in 2022, there's been 89% increase in AI-driven attacks just because the information is so much more readily available with ChatGPT. I mean, scanning the entire network and it's giving you the information. If you just ask it, hey, give me some code to hack this company, they'll help you with that, unfortunately. So anyone can now create that advanced malware. So stock number one that we're going to look at is actually CrowdStrike. This is a cybersecurity leader, so an AI native from day one. This uses machine learning, not just Gen AI, and it's strong growth plus a very sticky product. Cybersecurity is always needed. It doesn't matter which company you're in, which industry, you always need cybersecurity data and protection. So it's built for this moment. And also, since AI isn't getting any smaller, it's going to be needed into the future, which is why CrowdStrike is obviously a very, very sticky product. So you can see here, CrowdStrike, it's had quite a significant sell-off as well from its all-time highs at 547 all the way down peaking to 341. So a very significant dip on CrowdStrike. If we look at the one-year chart even, back in its all-time peaks, 534, on November 11th, 2025, all the way down to sitting at right now of 382. So that's a pretty big drop off, as you can see. And this is a lot of the fear that's caused by it. They're like, well, it's a software company, but it also helps with the infrastructure and protecting it with cybersecurity. If we look at the financials here on CrowdStrike, so as you can see, CrowdStrike still growing in Q4 of 2025, $1.3 billion in total revenue. We've seen 25% in gross profit margin growth. And so overall, really good financials. But as you can see, the past 6 quarters were a little bit rough in terms of the net profit and the EPS. So with a company like this, especially getting hit pretty hard, it was still growing while it was obviously in the negative on operating income for over a year, pre-tax income, net income as well. Can see negative 100%, and it was still growing. And this just shows that you have to invest a lot constantly. It's very expensive to actually invest in a company like this and have it grow long term. But you can see that they still hit earnings, the majority of them. So I think for this reason, this is such a strong buy. Very, very strong buy company, especially with how much we're going to need that cybersecurity layer in the future. Second stock is Zscaler. So Zscaler is a zero trust security model, and I'll explain what that is in a sec. Lower valuation compared to its peers, and its potential AI cybersecurity leader. Now, the risk to this is there is more competition within the space, but the upside is they have an AI security layer. So they depend on proving before someone uses the AI that they're responsible, and so a bit of a different business model. The only downside to this, and we've heard stories of AI, going in like email inboxes and just deleting like all the emails, or trying to help out with the task and then just totally wiping the whole system. So AI is not perfect, and they rely on a security model that basically puts a barrier before someone enters, and then it's a lot more free once they're in. And so it's a different security model, still does very good, but a great stock here. If we pop over at Zscaler, you can see, man, this stock has been hit super hard from its highs back here in November 6th, 2025 at 337, all the way down to $150 a share. Like it's been absolutely demolished by 50%. And you can see they're still hitting their earnings. So it tested near the all-time highs back here in 2022. And it's gone through quite the roller coaster. Now, this is definitely a company that I'm swing trading for sure. I'm definitely going to be looking for some bottom entry here. I think it's going to potentially go up, maybe go down a little bit, but I think it's ultimately going to end up near here, the support line at the 180 range, potentially all the way up to the 200 range. So right now, I think it's a bit low at 140s. As you can see, their earnings, they surprised earnings by 12% and by 2.1% for estimated revenue growth. So they're still doing good in these times. And I think this is a fantastic position that when there's lots of fear in the industry, what a great buy to swing trade, maybe keep it for a week, make some money, and then keep going. Stock number 3, Cloudflare. So this is essentially thinking of it as this. The internet, which was more popular and bigger out in the, well, not popular, but just bigger demand and growth for it in the 1950s and 60s. That's when it was built. Cloudflare is more rebuilding that new foundation to the internet. So the firewall, full cloud platform, So instead of having just everything, all the cybersecurity on individual platforms, it's just a conglomerate. So it's bringing it all together and putting it on one dashboard. It's positioned for AI-driven internet. So like I said, rebuilding. The internet wasn't built by AI, and they're fixing that. And that's a really strong point, especially if we look at the way that the internet is currently running. It's not built for AI. Like AI is morphing around it. And so this is a very key and clear position to look at. Okay, if we look at Cloudflare here, as you can see, they missed one earnings over the past year, so nothing crazy. They've had 3 consecutive in a row earnings, with the next one coming Thursday, April 30th, 2026. And you can see some consolidation in here around the 173 range to all the way up at 256 range. So quite an open base there. Now, good amount of volatility on this company as well. You can see a good uptrend, and similar to 2022, obviously when the markets started sliding, got hit really, really hard and has been recovering since. So this is a position that definitely could see some consolidation, maybe a drop off. And then we're looking at some entries around basically like September to December next year and then bringing it up. But this is a stock to definitely look out for in the space, because when you're thinking about the internet and how important it is for people's lives, you need security around there, and you need Cloudflare to help rebuild these spaces for the modern day internet, which includes AI. Let's jump into the next one, Datadog. This is massive. The data play. So this turns data into insights, into kind of like a single pane of glass for companies and another dashboard situation. So it's a usage-based model, which is fantastic, like we described. Instead of a per-seat model, it's based on the usage, and they could charge for that. And it benefits from AI activity. So even if they lose all the seats and they just are mainly helping AI use this tool, they're still making a ton of revenue and a ton of profit. Datadog is similar to Palantir in a way. And so if you're very, very fond of Palantir and you like that industry, this is a much cheaper option to get into, especially with the PE and the price per earnings per share, the EPS. And so definitely consider this as a buy. This one is hyped and this one is discounted. So there are definitely some risks to jumping in. This one is not as big as Palantir, but it's also not as overvalued. So a ton of upside. And the last one here, so stock number 5 is AppLovin. Now, this one's very important because they're going broad. AppLovin is a high growth, high risk position. So they're massive revenue plus earnings growth, and they're multiple business segments. So they're really putting their eggs in different baskets, and they're seeing which basket essentially takes off, and then they're going to cut the rest. That's what we're seeing online. But the execution of this is it's very, very complex to focus on multiple things at once instead of just being a master at 1 or 2 things. The good thing about this is with the AI space, because things are changing so quick, I mean, we don't know what's going to happen in 2 months with AI. We have no clue. It's good that they're actually becoming more of that conglomerate effect, like I wrote there, to put their eggs in multiple baskets and hope that one of them takes off. So let's go ahead and look at the stock here and the earnings. So as you can see, did really good with the earnings reports, has hit every single earnings over the past 2 years. And we've seen some sell-off. So since its highs at 738, coming all the way down to nearly half. So they're getting killed and they're coming up a bit more. If we look at the month chart here, it is on a slight downtrend, but I think it'll come back in the 450s to 500 range, especially once this stuff cools off. So a fantastic buy right now. And this is one that I'll be dollar cost averaging into for the next several weeks and months. So with that being said, let's go ahead and wrap up here on my final thoughts. So here's the core lesson. Just buy AI. There's a lot of hype around AI. Buy the actual business models that'll integrate into the future of the internet and actually looking at how to make money with this. So how does AI help or hurt that? So that's really the edge here. If you guys want to learn all the stocks that I trade, all my trade alerts, and my mentorship, apply below. We don't work with everyone, but you need to have over a $20,000 portfolio. But if you do have over a $20,000 portfolio and you want to get help with your actual trading journey, investing journey, and all my trade alerts, click the link down below, book a call with my team, and we'll see if we can help you. Peace.